Hey everyone, welcome to today's training. We've got the 7 Secrets of Consistent Forex Profits webinar masterclass. And yes, this is a masterclass because I have 7 lessons for you that are jam-packed with actionable content so you can start using it today and improve your performance. Now, for those of you who don't know me, I'm the founder of dailypriceaction.com, one of the top Forex price action blogs online today. I'm also a regular contributor to industry-leading news outlets like forexfactory.com. In fact, that may be how you came to be on this webinar. I've taught more than 1,200 students inside the members area from over 60 countries. I was also interviewed by Stocks and Commodities magazine as a top Forex trader for that month. And lastly, I began my trading career in 2002 when I was just 18 years old. In fact, I was actually 14 when I bought my first stock, but we'll cover that in a moment. And I went full-time with currencies in 2012. So here's a little timeline of my journey in the Forex market. And I'm going to try to run through this as quick as possible so that we can get right to the content. So when I was 14, back in 1997, I bought my first penny stock. 3 years later, the company went bust, but not before I sank about $3,000 into it. And when you're 14 years old, $3,000 is a lot of money. A few years later, I decided, you know what? I'm going to take the time to learn how to do this. So I started trading exchange traded funds, both double leveraged and triple leveraged ETFs. But then about 5 years later, I had some limited success during that time. And in 2007, I transitioned to Forex because I loved this idea of being able to go long or short and not needing special permissions to do it. And also the fact that the market was open 24 hours a day. And let's face it, I was pretty obsessed with trading at the time and still am. So the idea of trading a market 24 hours a day was really appealing. Between 2007 and 2010, I struggled big time. I tried every indicator known to man. I tried indicator combinations. I bought indicators. I spent thousands of dollars on trading robots that, as we all know, it didn't work. I thought if I just went out there and bought one of these robots that had this amazing track record, I could sit back, sip lattes and become a millionaire. Well, as we all know, that doesn't work out. So in 2010, after years of struggling, I found price action and I finally had my aha moment. All right. I found out that I didn't need those indicators, which we'll get to in a moment. 2012 is when I went full time, but not like you might expect. I didn't actually choose when I went full time. I was laid off. I was an engineer and laid off from my position. And I figured, you know what? Now's the time to go full time. I've had some success with price action, so I'm just going to give it a go. And I had some pretty good success early on, but things really picked up in 2013. And then in 2014, I started dailypriceaction.com because, to be honest with you, I had quite a bit of time on my hands because trading the daily time frame, I was only looking at my charts about 20, maybe 30 minutes a day. So I started Daily Price Action in 2014, and fast forward to today, I've helped over 1,200 traders from more than 60 countries. Here's what a few of my members have had to say about me, and I'm not going to go through and read them all, but I do want to point out Hamed from Canada. We're actually going to get into his case study a little bit later on because he actually has a really cool story that I want to share with you. So these are just a few of the things that some of my members have said about me as they've kind of transitioned from indicator-based systems to price action trading. So who is this training for? Today's training is for you if you want to learn how to profit with price action or if you've struggled with indicators. As I mentioned back in 2007, I struggled big time with indicators because I thought it was my job to find this combination of indicators that would just make me profitable. And as I came to find out, I didn't need them, and I'm going to show you that today. It's also for you if you want some help drawing key levels. So if you want help drawing support and resistance, or identifying trends, and that includes ways to identify changes in the trend, then you're also in the right place. And last but not least, I'm going to show you a way that you can increase your profits without increasing the risk. Now, that may sound too good to be true, but the last lesson in today's webinar will show you how I do it. And of course, today's training is not for you if you're looking to get rich quick or you expect results without effort. I think that speaks for itself that you've got to put in the time and effort with this stuff if you want to become profitable. The agenda for today's training is first, we're going to talk about this misconception about indicators. We're also going to talk about drawing support and resistance, and I'm going to show you a few tricks that I use to find the most accurate levels. I'm also going to talk about confluence because it's so important that you use it to stack the odds in your favor. And as I mentioned earlier, I'm also going to show you 2 ways that you can identify potential reversals in the market before they happen. I'm also going to share with you 3 trading strategies that I use, including a continuation pattern, a reversal pattern, and a candlestick pattern that I use all the time to make profit. All right, I'm also going to share what ratio I use for my risk to reward, and it's something that I teach my members and can make all the difference in the world. And lastly, this is the way that you can double your profit on one setup without increasing the risk for that setup. And again, it may sound too good to be true, but I assure you that myself and my members are doing this all the time. And if you have questions along the way, feel free to type them in on the side, but I'm also going to include a Q&A session at the very end of this where I'm going to spend about 15 to 20 minutes answering as many questions as possible. As you can see, we've got a lot to cover today, so I do want to mention that this training runs for about 90 minutes. So if you don't have 90 minutes to devote to this training, I do suggest that you come back later because you're not going to want to miss any of these lessons. That's especially true for 6 and 7 because the combination of a favorable risk to reward ratio and the technique I'm going to show you in lesson 7 can literally make you profitable. So right now, if you're like breaking even or just kind of struggling just a little bit and you feel like you're on the verge of success, lessons 6 and 7 can put you over that edge and make you profitable. My promise to you is that by the end of this training, you will become a better trader, okay? If you really devote yourself and learn this stuff, you can start using it right now, today, to become better, all right? So my promise to you is that for the next 90 minutes, I'm going to provide free content to you that is actionable that you can start using right away. And I also have a special offer and several bonuses that are available through this webinar only. So if you stick it out and stay to the end, I've got some bonuses that you're going to want to see. In fact, one of those bonuses I have never given away before. And until today, I'm the only one who's ever seen it. And that particular bonus has taken me almost 10 years to develop. So you're not going to want to miss it. And the only thing I ask of you is that by the end of this training, you take at least one of these lessons, one of these tactics, and implement it into your trading. And I guarantee that you will see results. All right, so let's go ahead and jump into the first topic. And the first thing I want to talk about is ditching the indicators. So what that means is we're going to get rid of every indicator on your chart. And this is really going to set you up for the rest of this webinar. So it's going to set the foundation for you to be able to trade price action. All right, so this may be a little bit basic for some of you, but just hang with me because I promise you that later lessons are going to get into some more advanced topics. And this section is really going to make your chart easier to read. All right, so there's this common misconception that you need indicators to become profitable. Well, guess what? You don't need indicators to become profitable in this business, and I'm proof of that. When I entered the market back in 2007, I thought that my job was to find this magical combination of indicators, such as the RSI or the MACD, that was going to make me millions of dollars. I thought that's just what I was supposed to do. And that's really not the case. Now, for me, there is one exception, 2 in fact, and that is that I use the 10 and 20 exponential moving averages as a mean reversion tool. I'll cover that in a moment, but I do want to just mention that there's nothing special about the 10 and 20 EMAs. It's just what I found to work the best. Okay, so you can experiment with an 8 and a 15 or a 12 and a 25. It doesn't really matter, but I found that the 10 and 20 work pretty well in any market. All right, so let's talk about mean reversion really quick. And this is really important because it prevents you from buying high and selling low. So mean reversion is this idea that prices always come back to an average in a trending market. And I'll show you an example in a moment, but this is where the 10 and 20 EMAs come in because I use them as a way to avoid buying high and selling low, right? Because we want to do the opposite. So I'll show you an example in a moment, but first I want to run through some of my chart settings. All right, so in MetaTrader, and if you use a different platform, that's perfectly fine. You'll just have to check with your broker to figure out how to change these settings on your platform. But in MetaTrader, if you right click on a chart and go to the properties tab, or select properties, and then go to the colors tab, there's a really quick way to get the look that I have, and that is to go to color scheme and select black on white. And what that's going to do is it's going to change all of these settings over here. All right, so that takes care of all of the colors on the chart. Now, as far as the grid and everything else, on the common tab, if you select chart shift, select candlesticks, and show open, high, low, and close, and just make sure everything else is deselected. All right, now you can play around with these settings. This is just how I have my chart set up, and it works out really well for me. Okay, so next up, let me run you through the settings I have for the 10 and 20 exponential moving averages. And for the 10, the period here is going to be 10, and the method is exponential. And you can find, and I'll show you this in a moment, where you can find this within the MetaTrader platform. For the 20, obviously the method is going to stay the same as exponential, and the period we're going to change to 20. Now, for those of you who are more visual, let me just pull up a chart of the Euro USD here. And this looks rather intimidating. And to be honest, I'm not sure if they still do it, but MetaTrader used to start new accounts this way. So if you were a brand new trader, opened a brokerage account, downloaded the platform, this is what you would see. And to be honest, for the way that I trade, this looks pretty confusing, right? We've got a MACD down here, stochastics, RSI. So the first thing you want to do, or the first thing we're going to do, is get rid of each of these. Okay, so we're going to delete stochastics, and we're going to get rid of the RSI. All right, get rid of both of those levels. All right, there we go. So you can see already that we have a lot more real estate to work with, and that's what we want. We want as much room as possible to be able to see the price action on this chart. All right, so now to run through those settings I just showed you, if you right click on this, go to properties, and under the colors tab, go ahead and select black on white. And under the common tab, we're going to turn off the chart on foreground. And I'm also going to turn off these two down here. So the only thing I should have left is the chart shift, candlesticks, and show open, high, low, and close. All right, so I'm going to go ahead and click OK. And there we have it, a nice clean chart with black on white. To get the two moving averages that I mentioned, the 10 and 20 EMAs, I'm going to go up here to View and Navigator. And from here, I'm going to drag the custom moving average onto the window. And under the Inputs tab, I'm going to select 10 and exponential. All right, I'm going to do the same thing for the 20. So I'm going to select 20 and change this to exponential. Oh, I wanted to change that to blue, actually. Okay, so, and again, I'm going to provide you guys with some notes afterwards. So if I'm running through this pretty quick, don't worry. Be sure to take your own notes, but I'll also provide you with these slides after the presentation. So I'm going to close out of this window, and there we have it. We've got a nice black on white chart, lots of real estate to work with, and I've also got my 10 and 20 moving averages. All right, now let me just explain where these moving averages come into play. And if you'll remember, I mentioned mean reversion a few slides ago. So with the Euro USD, what we're looking at here is the mean, the average for this market right now, for this trending market, is right here, right? So it's right in between the 10 and 20 moving averages. So right now with price up here, I don't want to buy, right? I'm not going to buy up here because there's a good chance that the market is going to come back down here into this range, right? So in a trending market, that's where you would want to buy, somewhere in that area. And of course, we would use key levels to find that, which I'll get to in the next lesson. But if you notice down here, right, this is where you'd want to buy. Back here as well. Okay, so we want to avoid obviously buying too high and selling too low, and that's how the 10 and 20 EMAs help us. So now that we've talked about getting our chart set up, and your chart should be nice and clean now, let's go through and talk about mastering support and resistance, And let me just say right off the bat that this is one of those topics that I really can't stress enough, because I've said it before that if you get this right, trading becomes almost effortless. And if you get it wrong, you're going to struggle a lot more than you have to. Think about it this way. When you were a kid, if you had a coloring book, right, your job was to color in between the lines. Well, support and resistance are no different. Once you have these levels on your chart, your job as a trader is to trade between the levels. So go ahead and write that down now in your worksheet or your notepad, that your job as a trader is to trade between support and resistance. Let's run through a few key points here, and then I'll get into an example. All right, so the first thing I want to talk about is that you should use, when you're trading price action, it's best to use the daily and weekly time frames to find key levels. All right, most of my, I would say probably 90% of the levels I draw come from the daily and weekly time frames. Now, between the daily and weekly, I would say that probably 70 to 80% of the levels I find come off of the daily, right? And the other 20 to 30% come from the weekly. So next up is to focus on the swing highs and lows. So the first thing you want to do when looking for key levels is focus on those highs and lows that really stick out. And again, we'll take a look at an example in just a moment. Next up is to include as many touches as possible without cutting off the upper and lower wicks. So what does that mean? By touches, I'm talking about the upper and lower wicks that touch off of the level, whether it's a horizontal, support or resistance, or a trend line. You want to try to get as many touches on those levels, but you also don't want to cut off too many wicks. So it's a little bit of a balancing act, and it's also something that just comes with practice. And speaking of trend lines, don't forget about them. I know a lot of traders don't favor trend lines. They try to stick to horizontal levels, and that's okay. You can do that. But I will say that if you're not using trend lines, you're really missing out. And in another lesson, we're going to get into trend strength, right? We're going to get into how to spot reversals. And if you're not using trend lines, you're going to be at a huge disadvantage. So just be sure that when you're drawing these levels, that you don't forget about the trend lines. So how do you know that you've drawn a level correctly? Well, this is where price action comes in, because what I normally do is I'll allow the market to show me whether or not my level is accurate, right? So it kind of helps me to justify whether I should keep that level on my chart or just get rid of it. All right, so you always want to make sure that you're letting the market do the work for you. So if a market comes around and doesn't respect the key level you have drawn several times, you probably want to think about getting rid of that level, because it's probably not something you want to pay attention to. All right, and this one is a little known secret that I'm going to show you. There's kind of a certain science to drawing these levels on your charts, and you'll notice that once you get good at this and you start drawing the levels, a lot of times there's a certain distance between each level. It could be 100 pips, it could be 200. Typically, it's some kind of range that could be something like, between 250 to 350 pips. And once you start to see that type of pattern, right, between these horizontal levels, what you can do is actually use that same range to find the next level in the sequence. All right, so we'll take a look at that on the Euro USD chart in just one moment. And last but not least is don't go overboard. All right, keep the levels to a minimum. Don't try to have 20 or 30 levels on a chart, because what's going to happen is you'll have so many levels on your chart that you won't be able to trade. You won't have enough space between them to be able to put on a trade. So you want to focus on the really key levels in the market, which are usually those swing highs and lows. All right, so let's pull up the charts again and run through an example here on the Euro USD. All right, so the first thing I want to point out is, if you'll remember, I mentioned that we want to focus on the swing highs and lows. So I'm just going to go ahead and draw out some of these swings on here, and we'll take a look at whether or not we can use these to draw key levels. All right, so what I want to do is just take my horizontal level here, and anytime I I'm presented with a blank chart, I want to start with my horizontal levels. And once I do that, then I can start looking for trend lines or channels or wedges or things like that. All right, so the horizontal levels are sort of my foundation when I'm presented with a blank chart. All right, so the first area I want to look at, because I can tell right off the bat that this might be something worthwhile, is this level right here. We can see we've got this swing high and this swing low back here. The next area that I pointed out was this here. Okay, now it does get a little bit choppy through here, but that looks pretty good at the moment. And the next high is this one here. However, look at how close these are together. So what I want to do now is just look back on my chart, and we can see this one up here that I just drew a moment ago actually looks pretty good, because we've got this swing low back here as well as some lows through here. However, this one gets pretty choppy. If you'll notice, there's really not much happening here. All right, so I don't think I want to keep this one on, so I'm going to go ahead and delete that for now. All right, so if I move down, I've got, excuse me, this area right here. So we've got a swing high and we've got a bunch of lows back here. And then I've got a level right here where we've got this swing low back here and some lows here. And then I've got this major swing low down here. Now you'll notice that there's really not much down here. However, the fact that this is a multi-year swing low, you better believe that if the market comes down here and tests this level, that there will be some sort of buying. All right, so I want to keep that one on my chart. Okay, so let's see. There's another little swing high here, but I'm not, yeah, see, notice how this gets choppy through here, so that's not something I want to keep on my chart. I'm looking for the really obvious stuff, folks. That's what we want to focus on, all right? So as far as up here, I mean, this has been pretty much a straight up market. I mean, there hasn't been much of a pullback, no swing high here. So I'm going to move out to the weekly chart, and you'll notice that we've got this swing high right here, and we've also got a swing high back here. However, again, these are really close together, so chances are it's going to be one or the other. And if I move in here, you can see that it's definitely this lower one and not this one here, because it gets choppy through here. All right, so I'm going to remove this one, and that one looks really nice. All right, so if the market comes back into this area, again, there will most likely be some buying through here. Okay, now as far as where the market might find some resistance going forward, again, if we move out to the weekly chart, we've got some major swing lows back here. And actually the market's testing this major swing low back here right now. So if I move into the daily chart, we can see that yesterday the market found some selling pressure up here. All right, so that's a really quick way of how I go through and mark my horizontal levels. And one thing you'll notice is there's a bit of a pattern, right? This isn't a perfect science, but if you'll notice, there's about 300 pips between these levels. There's about 260 pips between these levels. The one exception here really is this area right here. Because down here, again, there's about 340 pips. There's about 260 pips. So the idea here is that the next level, right, is likely going to be somewhere between 250 to 350 pips higher. All right, so if you start getting areas like this where, you know, notice everything's kind of spaced evenly, and then you get an area like this, you know, chances are one of these two levels is incorrect. Okay, it could be like that, or it could be this, you know, or it could be here. So it's not always going to be the case, but a lot of times you're going to find that there's going to be even spacing between your horizontal levels. All right, let's wrap things up with a trend line. So for that, if I come back here in the market, there's actually a really nice area that I'm going to show you. And I want to focus on this one because it kind of highlights the idea that you want to get as many touches as possible without cutting off too many wicks. All right, so if I draw my trend line here, starting at this low down here, you'll notice that there's two ways to draw this. And this is the big question that traders have, is they say, well, should I draw it here where I've got this lower wick and this lower wick? Or, right, do I draw it up here where I'm also including this swing low? And here's my rule. And it, you know, again, not an exact science, but this has worked really well for me, is I try to get as many touches as possible. And it's okay if I cut off a little bit of a wick here and a little bit of a wick there. What you don't want is you don't want to start doing this. Okay. Notice how I'm cutting off all this here. I'm cutting off, you know, more of this wick, and I'm cutting off almost half of this candle back here. So if I would draw the level here, because I want to include that swing low. Now, granted, this is in hindsight, so it's a bit easier. However, if I pan forward, we can see that the market found selling pressure up here when it retested the level, right, as new resistance. Okay, so it looks like that would have been the correct placement. And again, you know, it's easier in hindsight. However, if this had happened in real time, this is what I would have wanted. All right, so I would have wanted to include that swing low right there. Okay, so, you know, that's just a quick lesson, guys, on how I go about drawing key levels. Just make sure to focus on the swing highs. Don't forget the trend lines. And, you know, one key trick here is to make sure that your levels are spaced evenly. It won't always be the case, but a lot of times it'll make your job a lot easier if you start spacing your horizontal levels evenly throughout your chart. Just don't forget about those swing highs and lows. That's actually the perfect segue into our next topic, which is confluence. All right, now confluence is going to help to increase your odds of success, because essentially what we're doing is we're looking for areas where key levels intersect. All right, so confluence is the act or process of merging. And for a trader, what that means is we're looking for areas where a trend line may intersect with a horizontal level. And it's really just a three-step process where the first thing we want to do is identify things like horizontal levels, trend lines, and even channels. All right, we want to draw those levels as soon as we open a blank chart. So remember, I mentioned a little bit ago that as soon as I open a blank chart, I want to get my levels on there as soon as possible. Once I have those, I can start looking for areas where they intersect, and those are called areas of confluence of support or resistance. And then it's really just a matter of watching for buy or sell signals from those areas. And here's a great example of one that I commented on a while back. And you'll notice that we have this trend line here, and we also have a horizontal level. The third thing, now for confluence, all we need is two levels. So those two would have been enough to create this area of confluence. However, in this case, we also had this ascending channel. And what was great about this setup, and I actually shorted this market to the downside on a break below this level. But what's great about this kind of setup is that no matter what the market does, you can trade it. All right, so if it comes up here into this area, we can look for sell signals. If it closes below this level, we can look to sell. And alternatively, if the market comes up here and closes above this area of confluence, then we could have a potential long opportunity on our hands because the market is breaking out from this area of confluence. All right, so let's go ahead and jump into the chart now, and I'm going to show you an example that also occurred on the British pound versus the Japanese yen. All right, so we're back to the chart now, and I'm going to pull up the daily chart of the British pound versus the Japanese yen. And the setup I'm going to look at right now is this bullish pin bar right here. And if you're not familiar with the pin bar, it's okay, because I'm going to cover that in one of the next few lessons. But right now, what I want to draw your attention to is we had this horizontal level right here. And if I scroll back, I can actually see where the market made this high back here, and it doesn't touch it exactly, but it's within that area. So this would have been one that I wanted to watch. And we had this bullish pin bar. Now on its own, this would have been a decent setup, right? So we're talking about this bullish pin bar. And the reason it would have been a decent setup is because we had this horizontal level. And if we do a proper analysis here, we can also see that this market was in an uptrend, right? It's making higher highs and higher lows. But there was also another level here that we could have traded off of. All right, so if I come back here, there was actually a trend line. And now, obviously, we wouldn't have seen any of this at the time. Okay, all we would have seen were those two touches and this horizontal level. Now, when this bullish pin bar formed, all right, we would have really honed in on this area because, again, we have this intersection right here, which is a confluence of support. So this bullish pin bar became a lot more appealing because we have an uptrend, we have a horizontal level, and we also have trendline support. Now in hindsight, just to show you how this level actually affected the market afterward, we can see that it played a critical role in the reversal over here, where the market tested it here, here, and a few times just before it broke down, and then retested it as resistance. All right, so, but again, you know, the key here is to focus on these areas that intersect, because you're going to find some of the best opportunities with the highest percentage of success. Okay, so this bullish pin bar would have been one that I would have traded because it formed during an uptrend and also at a confluence of support. Okay, so next up is a topic that I get asked about quite often. It's probably one of the most common questions I receive, and that is, how do we tell when a trend is about to reverse? And the first thing I want to say is that it's not our job as traders to know what's about to happen. That's true for the direction of the market, as well as the buy and sell signals that we look for. So when we talk about trend analysis, it really comes down to figuring out what's likely. Is the market likely to reverse, or is it likely to go higher? And there's a few different ways that we can identify that. But first, I do want to talk about a few of the various trend lengths. All right, so it's important to understand that there's three different types of trends. First off, we have a long-term or secular trend, and that's one that lasts for 5 years or longer. Next up is intermediate or primary, and that's a trend that lasts for at least 1 year. And last but not least, and this is the most common that most people look at, is the short-term or secondary trend. And that's one that lasts for a few weeks or a few months. And the reason I say it's the most popular is because most traders that I've spoken with over the years use something like the 15-minute or the 30-minute or even the 1 hour time frame. So typically they're looking at a period of time that spans about 1 week, maybe two, up to about 2 or 3 months. And that brings me to an important point, and that is that the terms uptrend and downtrend are really incomplete thoughts without specifying a length of time. So if you come to me and say that the Euro USD is in a downtrend, my next question is going to be, well, are you referring to the long-term, intermediate, or short-term? Because that's going to matter. If you're talking about the last few weeks being in a downtrend, if we scroll back on a chart, maybe the last 3, 4, or 5 years, the pair is actually in an uptrend. So saying that something is in an uptrend or downtrend is really an incomplete statement. All right, so now that we know that, let's take a look at what actually illustrates or defines an uptrend or a downtrend, and that is the swing highs and lows. And this is what we've been talking about this entire presentation, is that much of what we do as price action traders comes down to swing highs and lows. So here we can see that we have a market, and granted this is just an illustration, but I'll get into an example in a moment. But here we have a market that's making higher highs and higher lows. And this is really basic stuff, but honestly, folks, this is what it comes down to. As a price action trader, everything that we do is really pretty basic. Okay, and just the same for a downtrend, as you might guess, it's the opposite, right? So we have a market that is making lower lows and we've got lower highs. Okay, so now as you might guess, the way that we identify a change in trend is also based on those swing highs and lows. All right, so here we have a market that has made, in the beginning, higher highs and higher lows. So if we look back here, we can see that we've got higher highs back here, and we've got higher lows. Now, notice that this swing high right here is the first time that the market didn't make a higher high. So if we see this, this is kind of a sign of exhaustion. So if you're looking to buy, you might want to be careful at this point, but it's not until this low down here that the market really starts to reverse. All right, so again, really basic stuff, but you can also see how powerful this can be. Now, remember a bit ago, I mentioned that if you're not using trend lines, you're at a disadvantage. And here's what I'm referring to. So again, just an illustration, but we're going to look at a chart in just one moment. And here I want you to notice how this market was making higher highs back here, but all of a sudden it started to make lower highs. And what's really key about this is that every test of the trend line, in terms of the days it took to rally higher and come back and retest it, was shorter and shorter. So we had 35 days, 25 days, 10 days, and then 5 days. Now, the result in most cases when a market does this is a break to the downside. All right, so notice that same exact illustration. What happens is the market closes below the trend line and then it retests that level as resistance. Now, this is the area right here that we want to look for sell signals. All right, so when we talk about how to identify that a market is likely to reverse, using a trend line in this way and watching how the market reacts to that level over time is really key. Now, another way that you can also identify a change in trend is, in addition to looking at the amount of time it takes for a market to test a trend line. Okay, so here we have the different points where it's testing, and notice that it's also getting smaller. However, in this case, we also have what I call clustering, or sometimes as heavy price action. And what that means is that you get a market that starts to retest it. Back here, this may have been, let's say, 20 days, 10 days, 5 days. And then all of a sudden you get these tests that only take a day or two. Okay, this clustering price action right above the key level. And again, in this case, the result is typically a break to the downside. Now, here's one that happened on a chart a while back. This is actually a 4-hour chart. And you'll notice how the currency pair was in this ascending channel. And you'll notice how the distance between these retests is fairly close, right? It's not getting closer. And then notice what happens right through here. Okay, notice how this price action starts to cluster. Back here, it took literally less than a day for the market to rebound. And then back here, we had several days worth of price action just hovering above that key support level. And again, what happens most times is you get a close below the level, and this is where we want to look for selling opportunities. And as promised, I'm going to wrap this up with a chart of the GBP JPY. All right, so this is the same chart we looked at in the last lesson, and it's also the same trend line. So we have a few things happening here. I'm just going to get rid of this horizontal level. Let's see, delete. All right. So we have a few things happening here. And the first one that you'll notice is that each retest takes less and less time. All right, so notice how much time it took for this first retest to happen. And then this next one took about half that time. And this one up here was about the same time too, but then look what starts happening. Okay, and in addition to that, we also get this clustering price action right above the level. And you compare that to these retests back here that happened rather quickly. And you can see how we could have used what we just learned to determine that a break lower was likely. And that's exactly what we did here. All right, so if we zoom in and take a closer look at the breakdown. Okay, so the breakdown happened right here. And it's also important to note that this is a daily time frame. So we want to trade this on a daily closing basis. And what that means is that these wicks right here don't concern us. All right. The market may sometimes do this where it trades below the level on the intraday, but the daily time frame closes above or below the level. In this case, it kept closing above it, right? So this was not a break back here. Now the first close came right here. And you'll notice that after that close, it retested the level a few times right through here. And again, that's where we'd want to look for a selling opportunity. And if I zoom in even closer, you'll notice that we had, on the very next day, we had a bearish rejection right here. So we could have used that to actually sell the retest of this trend line. So you can see how powerful this is because the market from there ran several hundred pips. In fact, I think this move actually totaled over 1,000 pips eventually. So extremely lucrative, but also really, really simple. But the key here is to look at the amount of time it takes for the market in between retests, and also watch out for that clustering price action. Okay, so now that we've talked about the 10 and 20 EMAs, we've talked about support and resistance, we covered confluence, and we've also talked about a couple of ways to identify possible trend changes. Let's get into some of my favorite strategies, all right? And we're gonna start with the pin bar. You may be familiar with this one. And the basic idea is that this candlestick pattern shows a rejection of support or resistance. All right, so we have the tail, the body, and also the nose. Now, what makes this candlestick pattern effective is this right here. So the tail should be 2/3 of the entire range. So from the high to this low, and the same goes for the bullish pin bar over here. All right, so this should be 2/3 of the entire range. And the color of the body doesn't really matter. All right, so it doesn't matter if this was black or white. Same goes for this. If this was a white candle or if it was a down day and it was black, that doesn't matter. What matters, again, is this tail right here. All right, so let's take a look at an example on the New Zealand dollar. And this one actually occurred, it's a bullish pin bar that occurred at horizontal support. So we had this level right here, and you can see where it was tested once before. All right, so we had this retest, and then we had this bullish pin bar that formed. Now again, notice how long the tail is. So this is certainly 2/3 of the entire range. And there's two ways to enter this, this type of candlestick pattern. The first is to, in this case, buy on a close above the high, and our stop loss would go below the tail. Now the second way is actually to do a 50% entry right here using the Fibonacci tool. The upside to this is that you can increase your R multiple. The downside, of course, is that you won't always get filled. So if you notice here, the market never actually came down this far. So in that case, if you had a 50% entry right here, you would not have been filled. All right, so, and just to show where I would have targeted, in this case, I would have looked at this area right here because we have these two lows back here and we also have these highs. All right, so just remember that with the pin bar, the two most important things are the placement. So you want to look for a key level and also the length of the tail relative to the range of the candlestick. The next pattern we're going to take a look at is the head and shoulders. And this is probably my favorite reversal pattern. They don't come around that often, but when they do, you should really pay attention because they can be extremely reliable and also offer some incredible risk to reward ratios. So I'm talking over 10R. So if you're risking 2% of your account balance, it can be over a 20% profit. All right, so it's made up by a few characteristics and it's really a pretty basic pattern. We have the head up here. We then have the left shoulder and the right shoulder. This level right here is called the neckline. And a key characteristic of this is that it occurs after an extended move higher. Now there's also an inverse head and shoulders pattern which occurs after an extended move lower. All right, so all the characteristics are the same. The only difference is that it occurs after a downtrend versus an uptrend. Okay, so if we head on over to the charts, I'm going to pull up the New Zealand dollar versus the Japanese yen. And just like some of the other structures we've looked at today, this is actually one that I commented on as it unfolded. All right, so here we're on the weekly time frame, and you can see that this is the left shoulder over here. We've got the head and the right shoulder. So this was actually a really nice neckline right here because we had all of these touches line up almost perfectly with it. Now the break happened right here. And in this case, the way that we would find the measured objective is we'd measure from this high up here down to the neckline. And then we take that same distance from the break and measure to a lower point in the market. All right, so let's take a look at what that was. So we can see here that this is almost exactly 1,000 pips. So if we come over here and measure 1,000 pips lower, all right, that brings us to right about here. So this would have been our profit target for this entry. All right, so we would have entered up here. This right here is the break, and our target would have been this level here. All right, so that's our target. And if you look, what's interesting about this is if you look over here, you can see that we actually have several lows that had formed a few years prior. All right, so that's a great way to validate this measured objective and know that you have the right level. All right, so in closing, just a few things to keep in mind. This should be traded after an extended move up, and I also don't trade it on anything below the daily time frame. All right, so I only trade this pattern on the daily and weekly time frames because I found that those two are the most reliable. The third strategy I want to look at today is the channel. All right, so we have the ascending and descending channels. Now, you may have also heard these referred to as a bull or bear flag, which they can be. They aren't always a bull or bear flag, but they are quite often. All right, so we have a few simple characteristics here. We have a preceding trend, we have consolidation, and then a continuation of that trend. All right, now this can also form at a descending angle, which would be a bullish pattern where the market trends higher, consolidates lower, and then continues higher. So what we want to do is once we have these levels drawn, we want to wait for a close, a break of support, and then we want to look to sell on a retest as resistance. All right, so let's go ahead and take a look at the British pound versus the New Zealand dollar. All right, so we're on the British pound, New Zealand dollar, and at first glance, this may not look like a whole lot, but we actually have an ascending channel here. So if I draw this top level first, okay, let me just get this accurate here. And then if we draw the second level down, you can see that we actually had a really nice ascending channel where the market had made this move lower. And this part right here is the consolidation. All right, so this is the part that we don't want to trade. What we want to do is wait for a close And again, we're on the daily time frame here, so we want to wait for the close below support. That's the break. Okay, once we see that, we know that we could have a potential setup on our hands. And if you'll notice, the very next candle produced a bearish pin bar. So what we'd want to do is enter on a 50% retracement right here. Stop loss goes above the candle high. Now, our target for this, the measured objective for a pattern like this, is actually found by measuring this entire move down right here. So we measure from this top to this bottom. And where a lot of traders get this wrong is they then measure from here to a lower point, but you actually want to measure from up here. So we're going to measure from this high to a lower point in the market. And when we do that, all right, I'm just going to run through this rather quickly. So we get, let's see. All right, so we come up with this level down here. Now, as you can see, the market didn't quite make it down here, but it came within about 30 pips of it. So that's a pretty good target, considering this was over 2,000 pips. All right, so in this case, the stop loss distance up here, just to give you an idea, was about, let's see, about 150 pips right here. And the target was just over 2,000 pips. All right, from a risk to reward standpoint, that was quite the trade. So the key takeaways here is you want to stick to the daily and 4-hour charts, and you don't want to trade this consolidation. Instead, what we want to do is wait for this breakout to trade with the prevailing trend. Okay, so the next two lessons really bring us full circle for today's training. And the first one I want to talk about is a favorable risk to reward ratio. Now, the way that we define a risk to reward ratio is with an R multiple. And it sounds a bit confusing, but it's really simply just one number that we use to identify the profit to loss ratio or the risk to reward ratio for any given trade. So some examples are if we had a setup with a 100 pip stop loss and a 200 pip target, it would be a 2R setup. Similarly, if we had a setup with a 500 pip target and a 100 pip stop loss, it would be a 5R. And again, 300 pip target with a 50 pip stop loss, it's a 6R setup. So all we're doing here is taking the target and we're dividing the stop loss amount, right, the risk, into it. So, if we had a 600 pip target and a 100 pip stop loss, it would be a 6R setup as well. Where some traders get tripped up is with a 1R loss. Now, what does 1R represent? 1R always represents the amount that you risk. So it could be represented as pips or a dollar amount. So a 1R loss is $100 and you make $200, you have a 2R profit. If a 1R loss is $100 and you make $500, you have a 5R profit. And again, if a 1R loss is $50 and you make $300, you have a 6R profit. All right, so just remember that 1R is always the amount that you're risking. It can be pips or a dollar amount. So that begs the question, what is a favorable risk to reward ratio? And my requirement for every single setup I take is 3R. So if I'm risking 100 pips, the target has to be at least 300 pips away from the entry. All right, so that allows me to have a win rate of less than 50% and still make money. Now, of course, I always want my win rate to be higher than 50%, but this allows me to make money even if it's lower than 50%. So I could have a 40% win rate or strike rate, and I can still make money that month. All right. So one thing that I do want to hit home here is that a trading edge is your entire trading style combined. So it's not just the strategies that you use, it's everything from the time frames to trend analysis, to the strategies, to the amount you're risking, to the risk to reward ratio. So your edge is a combination of all those factors. And the reason I bring that up is because a lot of traders think that, well, if you have a true edge, you should have a win rate higher than 50%. And I always have to counter that with the fact that my risk to reward ratio, my 3R minimum, is really part of my edge. So if I have a month where I only make, let's say out of 10 trades, I lose on 6 of them and I make money on 4, that's a strike rate or a win rate of 40%. that doesn't mean that I don't have an edge, because I could have still made money that month with a favorable risk to reward ratio. So you see that ratio is part of my edge. All right, so I hope that makes sense. So, your edge, really the 7 things I'm teaching you today, all of these things can become part of your trading edge that in the long run will make you money. Okay, so how do you find the profit target and the stop loss placement that make up these ratios? And the key here is that you always want to use the support and resistance levels that we learned earlier. So it can be a combination of a horizontal level and a Fibonacci, some area of confluence, but the idea here is that you always want to use these key levels to make up your targets and also define where you enter and your stop loss placement. And last but not least, always, always, always determine your profit target and stop loss placement in advance. And the reason for this is that as soon as you enter a position, you're no longer unbiased. Okay, you have a bias. You want to make money, and that can influence your decision. So you always want to come up with these placements before you have money at risk. Last but not least, we have the topic of pyramiding, which is probably my favorite topic to cover, because I love talking about how to increase our profit potential without increasing the risk. So what is pyramiding? It is strategically adding to a position as the market moves in our favor. So you never want to add to a position if it's losing. So if you short the market and it takes off to the upside, you don't want to add to that. So we want to add to a position as it becomes profitable. As far as timeframes go, I have found that anything above the 4-hour time frame is the most reliable. Okay, and you want to avoid dropping below the 4-hour time frame when adding to a position. And a little bonus tip here for you is if you're just starting out with price action, you want to avoid dropping below the daily time frame. Okay, so if you're just beginning, try sticking to the daily time frame until you become consistently profitable. Once you do that, then you can start experimenting with the 4-hour. As an example, if we were buying this market, all right, so if this market was in an uptrend and it broke above this key level, let's just assume that this is the daily time frame. So a daily session closed above this level down here, retested it as support, so we'd want to buy right here. Now, the second position comes in once the market comes up here and closes, and again retests this level up here as new support. So at this point, we've got 2 positions on. And really, we're just doing the same thing up here. Market closes above. We're buying again, so we've now got 3 positions on. Now, you may be wondering, well, that's great and all, but we've now got 3 positions on. It sounds like we may be over leveraged on that position, but here's the beauty of pyramiding. The entire time that we're adding, as the market moves up, once we put on this second position, we're trailing our stop loss. Okay, so we're trailing our stop loss up here, and we are now in a no-lose situation. Once the market comes up here, breaks this level, and we put our third position on, we once again trail the stop loss. And once we're up here, we are in a no-lose position. Okay, there's no way we can lose position up here or lose money up here, because we've now trailed our stop loss. We've got a buy here, another position here, and we're adding again up here, but look where our stop loss is. All right, so the beauty of this is that we're trailing our stop loss as the market moves in our favor. Let's bring that all together, and then I'll wrap up with an example on a chart. So in terms of percentages and our multiples, we're risking 2% on this first position. The market then rallies higher, closes up here, retests support. At this point, we're putting on the same size position, right? We're putting on 40,000 units. And again, our risk is 2%, okay, at 40,000. And so we're moving our stop loss up here into a break-even position. The market closes above the next level. We buy up here, again, trailing our stop loss. So notice that the position size is the same all the way up. Okay, so in terms of percentage, what that does is it turns a 6R, right, an R multiple, which would be 12% profit if risking 2%. It turns that into a 24% profit, or 12R, because these 2 positions added another 12% profit, or 6R. Okay, 4R plus 2R right here, those two positions. So now you're not going to get a lot of these setups like this, but let me tell you, even if you just get a few of these each year, which you can do, it can really add up. All right, so that's the beauty of pyramiding, is that we're increasing our profit potential as the market trends, and we're also covering our risk along the way. All right, so let me show you an example now on the Australian dollar versus the USD. All right, so we've got the Australian dollar versus the US dollar here on the daily time frame. And the first thing I want to do, and just so you know, this is how I had my chart set up at the time. So I had this trend line up here drawn across these two highs. All right, so we had this trend line, and you'll notice what happened here is the market had come up here and sort of just churned sideways, but slightly higher, right? So this was the consolidation that I was watching, and believe it or not, but that was actually a sell signal, and let me show you why. This is called an upward sloping flag, and it's actually something that I also teach. So we had this consolidation right here. All right, so it's kind of the opposite of a bull flag. In a bull flag, if the channel had formed at a descending, right, at a downward angle, it would be a bullish pattern. However, because it formed at an upward slope, it's actually an exhaustion pattern. All right, so what I did is I waited for the market to close here, and then I sold up here. Okay, so I sold here, and I had levels at the time. I had levels drawn right here, and I also had a level down in this area here, because you'll notice that we had this low and this high. So this was a bit of a pivot for the pair, and we also had these highs back here and these lows. Okay, so remember, I had my first position was up here, and my target for this trade was actually in this area. It was this second level. The reason it wasn't this first level is because the market had spent several weeks rallying, and I said, you know what, if this thing is going to break down, it's probably going to go lower than this first level right here. So I had trailed my stop on this day when the market sold off. I did start trailing my stop loss. However, my target was down here. All right, so this was the final target, and the entry was up here. All right, so once the market closed below this level, I said, all right, you know what? I'm going to look for another sell signal on a retest of this key level. And notice that we got a bearish pin bar right here. So using the 50% entry strategy, I entered short here. So now I've got two positions on with the same target. So the way this works out is, let me just go ahead and clear this off and show you the numbers. So the first entry up here, stop loss went above that candle high. My target was down here. Second entry. All right, so this right here was a 30 pip stop loss. This target down here was 160 pips. Okay, so that right there was a 5.3 R. Now this next position was also a 30 pip stop, and to this target right here was about 100 pips. It was just shy about 95 pips or so. So that works out to about another 3 R. Okay, so another 3 R, and this one was 5.3 R. So you can see how this works out, that the initial trade was a 5.3 R, which is not bad at all, because that means if I were risking 1% of my account balance, that would be a 5.3% profit. And considering this only took, let's see, 6 days to play out, a 5.3% profit in 6 days is nothing to sneeze at. However, once I added that second position, right, we changed that into an 8.3 R setup. So I essentially increased, if I was risking 1%, I increased my profit potential by 3%. And again, the beauty of it is once I trailed my stop up here, I was in a break-even trade, so I couldn't lose on this. So I basically added 3% profit potential and also capped my risk so that I wouldn't lose any additional money. So you can see how this can be really, really profitable. As always, folks, just keep it simple, and also stick to the daily time frame if you're just starting out. You can get into the 4-hour time frame, but I really advise those just starting out to stick to the daily and weekly time frames. And then as you get really good, you can drop down to the 4-hour. So what's next? Well, it's my hope that you're going to take at least one thing from today's training and implement it into your trading style, because if you do, I can guarantee that it's going to improve your results. All right, I know this stuff works. But the reality is that these are just a few of the strategies and techniques that I use on a daily basis. There's no way I can pack over a decade of experience into a 1-hour block. And also the fact that knowing is not enough. You can know all there is to know about trading price action. The key is to be able to implement it and execute it effectively. And that's why I created the Forex price action course and community. It allows me to not just teach, but also guide members through the learning process. Now, before I take you inside the members area, let me show you what 3 members have had to say about the program. David from the US says he gained more knowledge in just a few months than he did in the previous 18 months spent with indicator-based systems. He also says that I teach support and resistance unlike any other site he had seen. Clayton from the UK says that price action is in his blood now. He actually messaged me about a week after he joined and told me how glad he was he found his style in price action. And he also learned the importance of 2R or better when it comes to risk to reward ratios. And Dave from the UK joined me back in 2014, and he still posts inside the forums a few times a week. And he says that it's one of the best investments he's ever made, and that not one day passes without learning something new. Ahmed from Canada was a PhD student, and when he came to me, he was really struggling. He lost about $7,000 in 2 weeks, but within about 5 months of joining, he was able to earn consistently about 2 to 10% monthly profit with small enough drawdowns that he was actually able to get a job at a prop trading firm. And he messaged me asking if he could use some of the content to get the job, and I agreed. Within about 4 days, he messaged me back and said he had gotten the job. So let's talk about who this program is not for first. If you're looking to get rich quick, or if you expect results without effort, this probably isn't for you. All right. While this stuff does work, and I can certainly help you, you also have to be willing to help yourself. So you've got to put in the time and you've got to put in the effort to really achieve results. This program is great for you if you want to learn price action or if you've struggled using indicators. It's also an excellent choice if you want an experienced mentor. As I've mentioned, I'm in the membership area every day helping out members, answering questions, and also posting my own setups. So if you want feedback on your trades, you can also have that too. So we've got over 1,000 members in there, including myself, who can give you feedback on your trade setups before you actually buy or sell. So let's talk about what's inside. Inside the members area, there's over 50 lessons of world-class content, and each one is broken down by text, charts, and video. And within that is content that you can take right away and start using it. So it's everything from high-level concepts all the way down to the nuts and bolts. So this is actionable material. Inside the course, I talk about chart setups and timeframes. I talk about why the 4-hour, daily, and weekly timeframes are the best. I also talk about support and resistance. So it could be a horizontal level, trend lines, channels, wedge pattern, whatever it is. I teach all of the support and resistance levels that you'll need to become successful. I also talk about pin bars and inside bars. I actually started back in 2010 with pin bars, and that's all I used for about an entire year and became profitable with just that one signal. I use confluence, and I also teach it because it does stack the odds in your favor, just like we talked about in a previous lesson. I go into risk management and discipline because let's face it, you can learn all of this content, but if you don't have the discipline to be able to implement it, you're not going to see the results. So inside the course, I do go into risk management principles and also the discipline that it takes to achieve real results. I also go into advanced trend analysis. So it's what you learn today, but the difference is in the course, I go into a lot more detail. So I teach you how you can actually use those different trends to profit. Channels are another strategy that I use to make consistent profits. Again, I use ascending and descending channels, and the way that I trade them is a bit unique. And I also teach I have an entire module in the course with about 9 videos that shows you from start to finish how to find channels and also how to enter them and how to exit them for consistent profits. Wedges are another strategy that I teach. And inside the course, just like with channels, I have an entire module set aside where I teach how to identify favorable wedge patterns, how to enter them, and also how to exit for profits, and also knowing when to get out if the trade isn't going in your favor. And inside the course, you'll find an entire section where I have all of my cheat sheets and checklists. So these are all PDFs, so you don't have to search around the site to find them. I have them housed in one section, so they're easy to find. I provide members with trade ideas for every setup that I publish. So what you don't see on the blog are the trade ideas that I give to members. So every time I put out a commentary, I give them a trade idea of exactly what I'm watching. So in this case, we were watching for bearish price action, which would have been a pin bar, following a 4-hour close below a specific level. So within that, I also tell what would invalidate the setup as well as key levels that I'm watching. So not only do I provide you with the commentary and the annotated chart, but I also tell you precisely what I'm looking for. And perhaps the best part about the members area are the dozens of forums and hours upon hours of instructional video. So as you'll see in a moment, those forums, we have live setup forums. We also have general forums. So within live setups, I have a forum topic for every single currency pair where we discuss potential setups. And if you ever have any questions as a member, all you have to do is send me a message. So within the members area, up in the top, there's an area where you can send me a direct message and I'll get back to you within 24 hours. All right, so let me show you inside the members area. When you first enter the members area, you'll be presented with a dashboard that shows all the latest forum topics. All right, now, but first I want to show you the course. So we have this drop down here, and this shows all of the various modules. So let's say I wanted to learn about the wedge breakout strategy. I'd come in here, and this will show me all of the latest lessons for the wedge breakout. All right, now if I wanted to come in here and learn about how to identify profit targets, this will show me text and also video on how to do that. Now, what's great is that I've also included a section notes. So if you'd rather learn it via text and annotated charts, you can do that as well by coming in here. And I have a rather extensive lesson module on the wedge pattern where it shows you how to enter, how to exit, how to identify them, as well as things like measured objectives. And if we come over here to the daily setups, you can see this is where I post at least once or twice a day any setup that I'm watching. Now, what members receive that's a bit unique is this trade idea down here. All right, now what you can also do is come down here to the comments section. I leave the comments on for every setup I post. So what that means is you can come in here and ask me what I'm doing or where I'm targeting or why I'm doing something, and I'll be glad to respond to you. All right, so it's a great way to get some feedback and also learn as I post these daily setups. Now, the last section I want to show you is the live setups forum. All right, we have various forums like the general forum, but for today, I'm just going to show you this live setups area because this is probably where you'll be spending most of your time. So I have this broken down by every currency pair, and we also have commodities as well as metals. All right, so if we come in here to, let's say, the Euro USD and just go to the last post, if I wanted to join in the discussion, all I have to do, and here I am actually responding to one of the members. All right, if I wanted to come in here and reply to this, all I'd have to do is click reply with quote, and now I can add to the discussion, and I can also upload an annotated chart. All right, so I hope this quick overview has helped you kind of understand what we're all about and how you can not just learn inside the community, but you can also interact with myself and other traders around the world. So how much does all of this cost? Well, normally I charge $9.97 for access to the course and community. However, for the remainder of this webinar, I'm offering it for a one-time payment of just $297. And the crazy part is that that's for lifetime access. So you pay one time, there's no more monthly fees or costs ever. So here's what you need to do next. Go ahead and click the Get Started button on the right-hand side of your screen. And as soon as you complete that checkout process, I'll send you an email confirming your payment. And then I'll send you another email with an invitation link to join the community. And within that community, you'll have access to the full course and all the forums, including all the different features that I've talked about today. For those of you who take action during this webinar, I'm also going to include a PDF cheat sheet for all of my strategies. All right, this includes every single strategy that I trade, and it includes entry and exit methods. To be clear, this PDF cheat sheet is not available anywhere on my site. All right, it's only available through this webinar. I'm also going to give you lifetime access to my own online trading journal and watch list. So I'm going to send you a link where you can create your own private account, and it's unrestricted access. So to give you a little bit of a backstory on this, I created an online journal for myself years ago, and I liked it so much that I've decided to give you access to it. So it's unrestricted, lifetime access. You can add as many charts as you want to it, as many setups as you want. It gives you the ability to track your watch list, but also to track your profit and loss over a series of trades. So what you can do is you can actually add the trade setup with all of the details, including an annotated chart of the setup. Now, this is the bonus that I teased you with at the beginning of this presentation. If you buy during the webinar, I'm going to send you my personal Forex trading plan. This is something that's taken me 10 years almost to develop. So it's got tons and tons of information. It's going to tell you exactly how I trade. It's going to show you the setups. It's going to tell you about time frames. It's going to tell you about risk management. You name it. It's exactly how I trade. So if you're currently wondering, how do I draft a trading plan? Well, this is going to be your blueprint. All right. But again, it's only available during this webinar. So I'm going to let you in on a little secret. Have you ever wondered how I'm able to remember every setup I post on the blog, including all of the details of how to trade it? Or how about this? How do I track my trading performance each and every month? Well, that's where the online trading journal comes in, which is one of the bonuses for you watching this webinar. So let me take you behind the scenes and show you the features of the online trading journal. When you first log into the journal, this is what you'll see. So from here, I can actually add a new setup to my watch list. All right, so if I wanted to add the currency pair, I can do that from this drop down. I can add the setups I'm looking, or the characteristics I'm looking for. I can add the potential risk to reward ratio. I can add the time frame. I can also upload a chart. So once I do that, I can add it to my dashboard so I can easily see it from this screen. And what's nice about this is that I can also change everything right from the dashboard. Now down here, this is going to track your open and closed trades. So just like the watch list, you'll enter in a setup and you can enter in all of the details as well as charts. The very bottom of the screen will track all of your performance metrics. So it'll track the currency pairs you're trading, your win to loss ratio. It'll even track your risk to reward ratio over time. And the last feature I want to show you is the journal. So I've included a market journal where you can come in here and enter notes about any specific day. So you can add your observations, lessons learned, and you can even upload up to 5 annotated charts. All right, so these are just a few of the features of the online trading journal, but as you can see, it's kind of your one-stop shop for adding your watch list, open and close trades, tracking your performance, and also entering in notes about any specific day. As you can see, the online trading journal alone is something that I could charge for. But the best part about all of this is that you're going to get access to me, and you're also going to get access to thousands of active Forex price action traders. But this won't be open forever. The community is growing at a pretty fast pace, and I want to be able to manage that number so I can give each member the time that they deserve. Now, all of this today is also backed by my 30-day money-back guarantee. While I know that you're going to love the content in the forums, if for whatever reason you're unhappy, just send me an email within the first 30 days and I'll refund every penny, no questions asked. All right, so let's recap everything you're getting today. You're going to get access to the full price action course and community. That's lifetime access. But remember, the bonuses are only available if you buy now. The first bonus is my PDF cheat sheet, which will show you every single strategy I use, including the entry and exit methods. The second bonus is lifetime access to my online trading journal. And remember, that's unrestricted access with your own private account. So you can add as many watch list items and setups as you want. The third bonus is my personal Forex trading plan. Think of this as your blueprint to trading price action. So it's going to get you from where you are today to where you want to be that much faster. You're also getting the special webinar price of one payment of $297, that's $297 USD for lifetime access. And all of it's backed by my 30-day money-back guarantee. So if for whatever reason you're unhappy, just send me an email to justin@dailypriceaction.com and let me know, and I'll refund every penny, no questions asked. But again, just a friendly reminder that all of this expires at the end of this webinar. All right, so let me open up the floor now to any questions that you might have. Okay, so who's first? And if you haven't done so, just go ahead and type your question into the that sidebar there. And I'll try to answer it on this webinar, but if I don't get to it, because we do have a lot of people on today, I'll go ahead and try to answer it via email after the presentation. All right, but I'm going to try my best to answer as many questions as possible right now. So let's see. The first one, Rashad says he's in a different time zone. Says, I'm in a different time zone. Will this work? Yeah, I'm available from 7 a.m. to 7 p.m. Eastern. However, even if I'm not around, we have over 1,000 members now, and we have at least a few dozen members from every time zone in the world. So you're never going to be alone. And the great thing is that, because I've been doing this now since 2014, the members area has been around for a few years. So we have members who have been with me from the start who still post. So even if I'm not there, we have other experienced members who are profitable, and they can answer any questions you have. So you're never going to be alone, and you're always going to have an answer for any questions that you have. All right. Samuel says, what's the fine print with the guarantee? Samuel, there's no fine print. There's no catches. It's, if you're not happy within the first 30 days, just send me an email to justin@dailypriceaction.com and I will refund every penny. And the reason I'm doing that is really twofold. One, I'm confident in what I'm offering, but I also don't want you to be stuck with something that you don't enjoy. I know that price action isn't for everyone, and I don't want you to be stuck with that. So I really want you guys to love the course. I want you to love the community. And if you don't, that's okay. So that's why I'm offering the guarantee. So there are no catches. There's no fine print. If you're not happy, just send me an email in the first 30 days and I'll refund your money. All right. So John asks, what are my hours? What are your hours? Well, as I mentioned, I'm available from basically 7 a.m. Eastern to about 7 p.m. Eastern. So really 12 hours a day. I'm not there every minute, of course, but I do pop in a few times a day and I answer questions and also post my own setups if I have them and other observations about the market. So I don't really keep hours, but I am around multiple times a day. And again, if I'm not there, somebody else is who's experienced and can handle your question. So I hope that helps. All right, guys, keep those questions coming. If you haven't typed them in yet, go ahead and ask your question. All right, here's another one from Salvatore. He says he wants to know how long it's going to take him to become profitable. And so there's no way I can't guarantee that you're going to become profitable. What I can guarantee is that the course is good, the community is amazing, and I'm going to do everything that I can to make you profitable, but I can't guarantee it. With that said, I've seen people turn the corner within weeks. It could be 3 weeks, could be 3 months. So it's really hard to tell, but I have had people improve drastically within a matter of weeks. Okay, so here's a question on pin bars. Michael wants to know if they work on the 1 hour. The short answer is yes. The long answer is don't do it unless you're profitable on the daily charts and the 4 hour. So as I mentioned in the training, my recommendation is that you start on the daily time frame. You master that. Once you're profitable on the daily, feel free to move into the 4 hour. But if you haven't mastered the 4 hour charts and the daily charts, you really have no reason to trade the 1 hour. It's tempting because a lot of traders think that the more they trade, the more money they're going to make, but that's not true. So you want to stick to the daily and the 4 hour. So yes, a pin bar can work on the 1 hour chart, but I really recommend sticking to the daily and 4 hour. All right, and LM wants to know if pyramiding on the 15-minute chart is possible. So just like my last question, you can do it, but I wouldn't advise it. I don't teach the 15, I teach the 4 hour and the daily charts. And to be honest with you, you don't really need to drop down to something like the 15-minute chart. In fact, it's only going to hurt you because as you move down in the time frames, the chance of a false break becomes higher and higher. All right. So to put that another way, the higher time frames are going to be more reliable. So if you wait for a close above or below a level on the 4 hour or daily charts, that is going to be more reliable than on the 15-minute chart. So I hope that helps. All right, who's next? Agnes wants to know how this is different from other courses out there. I assume you're talking about the price action, Forex price action courses. I do know that there's a few other guys out there offering them. And the way that mine is different is, first of all, I teach various patterns that they don't. So we go into, head and shoulders, channels, double tops and double bottoms. We talk about trend lines. We use trend lines to identify shifts in the trend before they even happen. And, furthermore, what really separates mine is that I'm in the trenches with my members every single day. And, at least from what I've heard, I think what you'll find is, and I'm not trying to throw anybody under the bus here, but with a lot of the other communities, the coach or the creator of the course isn't as involved as I am. So, I make it a point to get involved with my members. I've even gotten on the phone with some of them before. I had one guy who was about to go full time and he wanted to talk on the phone prior to doing so. So I actually spent about 45 minutes talking to him on the phone. So, that's what really separates my group from others. All right, let's see. Muhammad wants to know if I offer signals, and I get asked this question probably at least once a day. So I want to be clear that it is not a signal service. If you want a service that's going to simply tell you where to buy and where to sell, this is not it. And I can tell you that I do that because if I were to just tell you where to buy and sell, I would be doing you a disservice. You're not going to become consistently profitable by simply listening to somebody else and following their direction. All right. So I take a more hands-on approach where I want to actually teach this stuff and I want to create profitable traders. And the only way I can do that is by not spoon feeding. So in other words, not telling people exactly where to enter. Now, with that said, I do occasionally offer what I'm doing inside the community. So in fact, just the other day, I mentioned that I was selling the euro, and I did post that inside the community along with my reasons for doing so and my profit target for the trade. So I do occasionally post inside the community, but that's more to get the conversation started. It's not meant to be a signal. All right. So, I don't provide signals, but I do occasionally talk about what I'm doing. And with that said, I'm also open to, if you ask me what I'm doing or positions I have open, I'm more than happy to talk about that. So I'm not a closed book, but I also don't want to, just tell you where to buy or sell. Because if I do, there's no point for you to actually learn it, which is the whole point of my program. All right, so James wants to know if I trade anything other than currencies. I don't personally, but as I showed in the members area, we do actually have metals and commodities because we have traders who do trade, things like gold or oil or things like that. So we do have forums for it, but I don't personally trade them. So I only trade currencies, but again, we've got guys in there who have been doing this for years and they do trade commodities and metals. All right. Peter says, he asks if I ever trade within a channel. So it depends on the channel. As I was covering the channel section, I'm not sure if you remember, but I had mentioned that they can also be referred to as a bull or bear flag, but they're not always that. So what that means is that sometimes you'll have a channel where within that channel you'll have maybe 5, 6, or 700 pips. And if that's the case, then I might consider buying and selling within that range. But typically I treat a channel as a consolidation pattern or a continuation pattern. And so I don't want to trade the consolidation. I want to trade the breakout. So I guess to answer your question, it really just depends on the circumstances. Okay, Nicolay, I hope I'm not butchering your name too much, asks, what other strategies do I teach in the members area? So in addition to the ones that I covered today, so I guess just to give you a complete list, for candlestick strategies, we trade the engulfing bar, the inside bar, pin bar, and then for chart patterns, it's the head and shoulders, inverse head and shoulders, double tops, double bottoms, ascending and descending channels, and we also trade wedges. So that can be an a rising wedge, a falling wedge, and I also do teach something called a blind entry that doesn't require price action. So it's a little bit more advanced, but I do cover that as well. So the bottom line is there's plenty, even on the 4-hour and daily charts, there's plenty of opportunities every month for the strategies that I teach. Here's one from Sean P. He asks, why did I start the members area? Well, Sean, there's actually a few different reasons. I touched on it in the beginning a little bit, but so back in 2014, I was profitable at this time. I had been for a couple of years. And because I was trading the daily charts, I had a lot of free time on my hands. I probably checked my charts about 20 or 30 minutes each day. And so it was kind of a combination of having a lot of time on my hands, and I also enjoy teaching. So, I thought, why not create a website around the topic that I love, because I'd say borderline obsessed with trading. And so I figured, why not start a website where I can spend my time talking about something I love, and B, I can also give back to people and teach, which I also enjoy. So it was kind of a combination of factors, but it all started with the fact that I had all this free time on my hands. All right, folks, I'm going to take just one more question. I'm sure there's others out there, but again, if I didn't get to yours, just type it in and I'll do my best to answer it afterward. But the last one I want to answer comes from Rita. She asks what currency pairs I trade. So the last time I counted, I'm trading about 22 currency pairs right now. But inside the members area, there's probably at this point about 50 different topics. And each topic is its own currency pair or metal or commodity. So we probably have, I'd say, about 50 to 60 topics in the members area. And, if there's ever something that you don't find, you can just private message me and ask me to create it, and I'll do that right away. So hope that helps. But yeah, for me, the last time I counted, it was right around 22 or so. Okay, so I'm going to go ahead and cut it there because we've been on here now for, I believe, over an hour and a half. So I'm just going to stop the presentation there. And again, if you have questions, answer them one last time here. And just a friendly reminder that the offer I mentioned earlier and those bonuses are ending in a few minutes. So in just a few minutes, I'm going to shut this window down. So if you're kind of on the fence right now, it's a good time to go ahead and make a decision. But I really enjoyed this today, folks. Thanks for coming out.